Loop Capital Markets, Anthony Chukumba, who actually, I understand, Anthony, dropped the stock coverage as a result of all of this volatility. So what do you make of the big parabolic moves that we've seen yesterday and today?
I mean, I've got a lot of thoughts. I mean, one is that this is the biggest dead cat bounce in the history of Wall Street. I mean, what happened with GameStop when it went to 480 was one of the dumbest, most nonsensical things that I've seen in quite some time. This is the second dumbest. I've been on Wall Street for a long time. When the CFO is fired just after the quarter ends, but before the company reports earnings, that's not a positive sign. That's a very, very negative sign. And so I'm gobsmacked right now, just as I was a few weeks ago.
Your last price target on GameStop was $10. It's now sitting at almost $150 at this point. What do you make of those moves?
I mean, I was being generous at $10. I mean, you know, certainly if I was still covering the stock and the CFO, like I said, was fired just a couple weeks before they were supposed to report earnings, I'd probably lower my price target. I mean, look, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And what that means is at some point, the stock price is going to have to reflect the fundamentals of this company. And the fundamentals of this company are terrible. This doesn't make any sense. And you know what? Call me a boomer. I'm perfectly fine with that.
Okay, but is this the new reality? I mean, if you have people who on Wall Street bets that can talk up a stock and who as a unit can push prices around, is this the new reality and something that analysts are going to have to factor in, that portfolio managers are going to have to factor in, and certainly retail investors need to consider?
I mean, I hate to be a fountain of cliches, but, you know, look, the market can remain irrational long as you can remain solvent. This can go on for a long period of time, and there are people that can get hurt by this, particularly, you know, people who are short the stock. But at some point, the stock price is going to have to reflect reality, and this is going to end badly. Everyone talks about Roaring Kitty and all the money that he's made. Well, what about the people who bought GameStop at $300, $400, $483 on margin? We're not hearing many stories about them. This will end badly. It's not a question of if it will, it's just a question of when. This stock is worth $10 at the most.
We were talking earlier today, Anthony, with another analyst, and I asked this certainly to someone who is uneducated, sort of smells. It reeks, frankly. Do you think that there's any kind of malfeasance or illegality going on here, or is this fundamentally just a crowdsourced group of people talking their book to talk the stock up and force a short squeeze or whatever they're doing now, which may have nothing to do with a short squeeze?
I don't think this is a situation of blue horseshoe loves GameStop, call all your best clients. I don't think that there's anything untoward that's being done here. It's not illegal. The only thing that would be illegal is if it was a pump and dump. In other words, if there were people that were going onto these message boards and talking up the stock and then selling into the strength. But as far as I can tell, these people are true believers. So there's nothing that's wrong with it from a legal perspective. But like I said, a lot of investors are going to get hurt. And, you know, I'm not worried about the Melvin Capitals and the Maple Lanes of the world. You know, they've got plenty of resources, but I am worried about that person who buys, you know, $100,000 worth of the stock on margin at 480. That person's going to get hurt real bad.
Shepard Smith here. Thanks for watching CNBC on YouTube.